Welcome to Econoday Unplugged. Each week, our expert team explains the relationship between economic announcements and market reaction. For over 25 years, Econoday has provided value for the investment industry, amassing a comprehensive, machine-readable database of global market events. Econoday provides solutions for macroeconomics, sovereign debt, agricultural commodities, and historical data, all delivered via API, XML, and HTML. Connect the dots with Econoday. Subscribe to the Econoday Unplugged podcast and go to www.econoday.com to follow market events.
Hello and welcome to Econoday Unplugged. It's Tuesday, the 28th of May 2019, so just a couple of days before the start of the Cricket World Cup, and hooray for that. Mark Pender, I suspect practising his googly even as we speak, is stateside, and I'm Jeremy Hawkins here in London. For those of you who haven't come across it, a googly, of course, is a certain type of cricket delivery. Okay, well, since we've just had all these European elections, we thought we'd kick off with those and have a troll through what's been going on there. On the whole, I suppose we can say the opinion polls got it kind of right. We did indeed see a fairly significant swing away from the centre-left and the centre-right parties toward the at least semi-extreme ends of the political spectrum. However, that might have worried financial markets and particularly the euro. But as it turned out, the shift wasn't quite as big as certainly some of the more outlandish forecasts were suggesting. And crucially for sort of a stability of or harmony of politics across the European Union, we've ended up with a European Parliament which, if we combine together all the pro-EU countries, the bloc there still has a majority. And that's going to be important going forward. It doesn't mean to say that there won't be some kind of tinkering with fiscal policy, because both the two major parties, so the European People's Party and the Socialists and the Democrats, who have dominated the political scene over the course of the last 20 years or so, they're going to have to accommodate the demands of the Greens and the Liberals. So there's probably going to be some tweaking. Yeah.
Jeremy, this is Mark. Just a question on the proportion of power that the European Parliament has in fiscal and monetary policy.
That's a good question. I suppose if we go back far enough, it is always seen as something of a poor man's almost EU Commission. They made some announcements and stuff, but effectively it was the EU Commission, the executive arm of the European Parliament, really, which did all the work and made the big decisions. But over time, it's got to the stage now whereby the politicians themselves have become much more important in the setting down of crucially things like budgets and implementing legislation. So I guess you can say now it's kind of like a 50-50 split in terms of big policy decisions between the European Parliament and the EU Commission itself. And it's worth mentioning on that front that indeed, I think as we record this today, we have a meeting between the various EU leaders to determine just what this new EU Commission is going to look like. It's not just European elections we've had, but as a result of that, we're going to see some fairly big name jobs across Europe coming up for negotiations. In particular, the EU leaders will be deciding who will be replacing Jean-Claude Juncker. Of course, he's the head of the EU Commission. And it's interesting because if the French were to get their way, then they'd install Michel Barnier. Now, Barnier, of course, has been the chief negotiator in all the Brexit talks. And were he to get that job, well, it's pretty safe to say that whoever becomes the new British Prime Minister, they're still going to be stuck with the withdrawal agreement as it currently stands, as drawn up between current PM Mrs May and the EU Commission itself. We're also going to see negotiations over the new European Council president, and particularly of interest for financial markets, who's going to replace the European Central Bank chief Mario Draghi. So there's a lot, and this, of course, is going to have to be voted on the European Parliament. So Parliament itself, in various shapes and forms, is going to have a pretty big say about what happens.
And who are the candidates here? Do they have traditional, prudent, fiscal, monetary, a sense of responsibility that way? Are there other people who are newcomers? I mean, what's the political or the policy leeway that's possible?
Well, it depends what this is. To be honest, that's a great question, and that's the one which what comes out of this is going to shape really what happens to EU Commission. The question mark at the moment is really the fundamental one: is how much of the European Parliament election results is going to be taken on board by the EU leaders. Essentially, what we're really saying, there's been a clearly marked vote against the old establishment bloc, and a shift towards more liberalism, towards more green policies. And are we going to see whoever gets the big jobs, taking account of how the voting pattern went? Now, to be honest, it's not clear who's going to get any of these jobs at the moment. For a few names who are sort of at the forefront of the papers, but really it's going to be a case of negotiating between all the various leaders and come out with some kind of compromises.
So these people are technocrats who they're considering. There's no charismatic personality with a unique economic viewpoint, anything like that?
I not really think so. I mean, when we get down to, I suppose, for financial markets, perhaps the most important job of all, the replacement for Mario Draghi at the European Central Bank, then yes, we're going to see there someone who clearly has a very good background in terms of economics, in terms of politics, and in terms of economic and financial stability. And I suppose looking around there at the moment, I suppose one of the main candidates is the Bank of Finland governor Olli Rehn, who's certainly supported by some people, and that would be an interesting call because he's one of these guys who is quite interested in having something of a significant shake-up of the way ECB policy is structured, and possibly even having a look at this 2% or near 2% inflation target. So what comes at the spin-off from these elections really could have fundamental implications for what happens to not just fiscal but monetary policy over the course of the next few years.
Well, I remember the Finns during the Greek controversy. They seem to be very conservative. Is that a generalization? I mean,
possibly a bit conservative. I think at the moment, I mean, there's this battle going on at the moment within Europe as to how the likes of Greece should have been treated. Now, one of the big winners, of course, coming out of the Euro elections was the very much anti-establishment Northern League, or they call themselves the League now, in Italy, under Deputy Prime Minister Matteo Salvini. Now, Salvini's current push is to come out or he's already told the EU Commission that when push comes to shove, he's not worried about EU fiscal constraints, the so-called Growth and Stability Pact. If he thinks it's necessary to inflate the Italian budget deficit in order to reduce unemployment, he's going to come out and do exactly that. And indeed, there's some bits and pieces in the press at the moment suggesting that the European Commission is planning to penalise Italy under its excessive budget deficit procedures and possibly introduce sanctions as early as June. Now, if that happens, that's going to really start putting the cat among pigeons, because having seen those parties who really stand for fiscal discipline getting something a proverbial kick up the backside, Italy could find perhaps more support from other countries than they've seen in the past. So politics is going to be quite fragile, I think, notwithstanding these results at the weekend.
So is that a good handle for the viewer to look at Italy to see how policy is shaping? If you're getting,
I think it's a good question. I think it's certainly worth it, and it's got to be said that Italy saw one of the biggest shifts to the sort of the right wing, and certainly the nationalist and anti-establishment wing that we've seen right across Europe. So to that extent, it probably gives a misleading, strong idea of just how things have gone. Nonetheless, it's going to be particularly interesting to see how other countries and other members of the EU Commission actually respond to what Italy are calling for.
Oh, Jeremy, I have a question about the IMF, and this has to do with Brexit. I'm trying to figure out, going through this different scenarios on Brexit. Has the IMF done anything on this, or an institution such as that, on what the actual immediate risks are for a Brexit no deal?
Well, the IMF essentially, I think, has come out along the same sort of lines as the likes of EU Commission, and they've made warning noises to the effect that a Brexit without a trade deal is not a good idea. I think if you go through the numbers, essentially, if I remember rightly, it's about 13% of UK GDP is directly the result of exports going into the European Union. So anything which upsets that flow is going to be a negative. And yes, while it's true to talk about, well, if we pull out, we got the opportunity to arrange new trade deals with the likes of the States or India or Australia, whoever it may be, they take years to put into place.
So it's empirically unknown what the effects of a no-deal Brexit are.
That is exactly it. And I suppose while we're on Brexit, it's worthwhile just touch on what these EU results mean for Brexit itself. I suppose quickly we should just rewind back to next week first, and I expect most people have seen, but just in case anyone lives in a hole out there, UK Prime Minister Theresa May announced that she would be standing down as a Tory party leader as of Friday, the 7th of June. To be honest, she announced this last week, but had she not said that, given how badly the UK government performed in these Euro elections, then should have had to announce it on Monday anyway. But anyway, that means then we face a Tory party leadership challenge, which is expected to run through, probably to be completed by the end of June. At the moment, I think there's 10 or even 11 candidates who have put their names into the hat, and that'll be whittled down to a final two and eventually a choice of whoever becomes the final leader, and that leader should then become the next prime minister. Now, what's that prime minister going to face? Well, the European election results themselves, left, as we mentioned, are still pro-EU European Parliament. So far, so good. But it's got an awful lot on its plate to sort out, be it in terms of sorting out new coalitions to make sure we do indeed have this pro-EU side. The smaller countries have got to get smaller parties have got to get involved with the bigger ones. But we almost certainly now got a stage whereby there's so much on their plate that the last thing they're going to want to do is to change the withdrawal agreement between the UK and the EU already agreed. So the new Prime Minister is going to face exactly the same problem there. Now, in terms of the UK results, what we saw was that the Brexit Party, which essentially just stands for Brexit and not really much else, was easily the largest vote share. They got 34% of the UK vote. But a bit like the European Parliament, if you add together all the parties which stand for either at least having a second referendum or indeed staying within the EU, they've got just over 40% of the vote.
But Jeremy, that's the thing. There's such clarity with the Brexit, right? You know what you're voting for. With these other ones, is there going to be? I know there's a Remain. Is there a Remain party? I mean, are there going to be a coalition or
this is the problem. There is a Remain party. In fact, the Greens, the Remain party, there's a number, and indeed the Labour Party, effectively, were all kind of running on a pro-EU ticket, but they were doing it individually. So really, if you're trying to judge, what these results actually mean for, do we want to, follow Brexit or do we want to stay in the European Union? You've really got to do the maths and add together, the sum of the votes for those parties who are still pro-EU. And that's where this kind of 40% type figure comes from. So, but I think, allowing for errors in the numbers and stuff, it still kind of suggests that the UK is split pretty well down the middle in terms of those people who want to leave the EU and those people who want to stay in it.
But Jeremy, isn't it kind of an academic question to ask how many people want to remain? Because that vote has already been taken, right?
It has been taken, but it may be taken again. As we currently stand, let's assume we got the new Prime Minister in now. Well, what's he facing? What's he or she facing? He or she is facing a British Parliament, which supposedly is supposed to be delivering Brexit by the end of October. However, as things stood when they were last voted upon, of all the options which were put to British Parliament, nothing had a majority. Now, there was no majorities. Well, the one thing which did not have a majority, well, at least to vote against, was that Parliament does definitely not want to leave the European Union without some kind of a trade deal. Now, that's about the only thing you can hang your hat on at the moment. So there's those Brexiteers like possibly Boris Johnson, who is the leading candidate or the bookies' favourite to take over Theresa May's job. He's intimated that he wants Brexit, and if necessary, push comes to shove, he'll leave without a trade deal regardless. However, he's got to get that through the UK Parliament. And UK Parliament, unless everyone's changed their minds, are not going to vote for a no-deal Brexit.
So what would they do? They would push a new deadline?
Well, what would happen would be, what do you do? Parliament's in kind of a logjam. So there's two things you can do, really. Yes, certainly they can sort of extend the blooming deadline yet again, or they'll simply go back, right, Parliament can't decide, so we're going to have either a second referendum, or there's going to have to be a general election.
That would be the equivalent of a referendum. And if they do that, then Brexit. But there is no Brexit party right now.
Well, this is the problem. Even if you have a general election, it's not just a case of, let's say, Labour stands for stay in the EU and the Tories stand for leaving the EU. Both the individual parties are split down the middle as well. So I think really the only way you can find out if things have changed over the course of the last 3 years since the first Brexit referendum back in 2016 is to have a second referendum. But currently, Parliament says it doesn't want to do it. But at some point, something is going to have to change.
And so what does the investor do? Just pile their pounds into their mattress and take
cover?
I'll
tell you what, I mean, the investor is interested in looking at the way the pounds reacted. And I think there's a lot of people, dealers, who are simply scratching their head. We did see sterling have a relatively poor time over the last couple of weeks. And that was really because there was this growing sense that Theresa May, who, yes, she's pro-Brexit, but she's very much a soft Brexit, who wants a trade deal. So it's seen by financial markets as being relatively a good thing. Speculation was growing that she was about to stand down, and the worry was if she went, it could be a hardline Brexiteer coming in, and that certainly troubled the pound. We talked before about our benchmark, what determines sentiment towards Brexit and so on. Sterling euro, and sterling fell about 2 to 3 cents against the euro. It's stabilised and really hasn't done that much since we had these parliamentary election results, and I think it really is that people simply have no idea still as to what's finally going to happen. Yes, we've got a new Tory party leader, a new PM coming in at some point, but the fundamental issues surrounding the whole process are exactly the same now as they were before.
Well, that's interesting, Jeremy, because uncertainty is traditionally a negative for an asset, financial asset. Yep. And maybe we might not be seeing it in Europe, but certainly there's money coming into U.S. Treasuries, and maybe that's an uncertainty play to a degree regarding these complete unknowns coming out of Europe.
I think it's right. And to be honest, I mean, looking at what's just, the nexus of exchange rates at the moment, perhaps one of the slightly surprising things to me is that the dollar isn't doing rather better than it is, because you've got the UK, which is just plagued by this massive Brexit uncertainty. And anyone who says they know what's going to happen, they're lying, because they don't. And now you've got the European Parliament elections, which is kind of, I won't say necessarily opened up a can of worms for European politics, but it's going to lead to some kind of changes and people aren't sure what's going to happen. So purely from that angle, I'd have thought that perhaps the dollar could have been a bit stronger.
Well, maybe that's being offset by the widening government deficits and the increasing amount of Treasury issuance. So that might
be, or perhaps it says something about people starting to think, well, hang about, perhaps the US is beginning to slow, the Fed's going to cut.
It's true.
I don't know. Yeah. There's a lot going on. Yeah. Okay. Well, I'd say a lot going on. I've been prattling on. Is there anything from the stateside which you think we should be talking about?
No, I'm just in shock and awe watching over here across the Atlantic of what's going on over there. And it's amazing to me. And it reminds me, though, that this was developing in Europe before it came across into the 2016 election here. It was like very close together, but there was a little bit of that Brexit thing was the first shot across the bow of this, change, the secular change in economic balance,
It's got to be said, there are some very sort of learned political people over here who know much more about it than I do, who really are calling what they're seeing now as being not just as a short-term knee-jerk reaction, but beginning of a fundamental change in the way politics works, certainly in the UK and possibly across Europe as well. So maybe in case they watch this space, but it's going to be a pretty big space to watch, I think, over coming months, quarters, and even years. Okay, anything else? I suppose just quickly mention, there's not much central bank stuff's a bit thin on the ground this week, but we do have a Bank of Canada meeting tomorrow where very much expectations are for no change in the overnight target rate at 1.75%. And that's going to reflect a very strong April employment report and probably decent March GDP on Friday after poor figures at the beginning of the quarter. Okay, well, I think that's probably it then. So on behalf of Mark and myself, as always, thank you very much for listening. Don't forget to keep up to date with the latest movers and shakers in the world of economic data and events via Econoday's global economic calendar. Enjoy the cricket, and we'll be back next week. Bye for now.
In response to regulatory requirements under MiFID II, Econoday has launched the first and only third-party sovereign debt auction database that provides pre- and post-trade transparency. Our machine-readable database tracks historical and immediate auction data of 10 countries, averaging roughly €1.7 trillion spread over 700 auctions each year. Our specialists cover cross-country comparisons of rates, spreads, coverage and volumes in trading decisions. Go to www.econoday.com and follow @Econoday on Twitter to learn more.